2025 is the golden age of gold, and there's not much sign of it slowing down too much. Although the obituary is already being written by some analysts out there, including one I'm going to be referencing in this video, but this is not the biggest rally for gold, and that is true. I'll explain why and how in this video and the big mistake that was made in the information that the analysts provide. Let's talk about it as we explore. Gold is doing quite well this year. It has pulled back some, but we've seen it hover around that $4,000 an ounce mark. It is about $15 shy of that in overnight trading as I record this video, but nonetheless, we could see a pullback from here, but more than likely, I think we're going to see gold continue to rise up as I've been talking about it in recent videos. Of course, I could be wrong about that too, but this analyst that I'm going to be referencing here, I think has a bias against gold, and we do see that from time to time, even though gold has done quite well. And I'm going to tell you where he made a glaring mistake here later in the video. One thing I like about gold is it has performed so well over the past 2 years here, but in all actuality, it has performed quite well over the last 50 years. It has performed quite well over the past 5,000 years. That's right. And how does it perform? What does it do? It just sits there, doesn't pay a dividend. It preserves our wealth. The folks at Summit Metals, they know this all too well. In fact, they themselves hold gold. I know one of the owners of Summit Metals bought a kilo gold coin for himself. They put their money where their mouth is for sure. And they created and invented these little wallets here, which are really cool in ways you can be able to add more gold to your portfolio. I need to finish filling this thing up. We'll hopefully do that soon, but nonetheless, you can get one of these and get some gram gold. You can get 10th ounce gold, quarter ounce gold, any kind of size of gold you want. They got some pretty competitive prices on those. So check them out by clicking on the link in the description below and experience their great customer service for your wealth as you elevate it. So this analyst here is from Australia, Clyde Russell, says gold's rally looks huge, but only ranks third in the last 50 years is the headline here. From Australia, gold's recent retreat from a record high has led to questions as to whether the precious metal has run out of steam and is due for an extended period of sideways trading, as it has happened in the past. Well, he casually uses that word record high, but really he kind of misses the boat on that. Because what does that mean? He glosses over it, and that's really the last time he mentions it in the article. But that's really what he's missing here. It almost just rolls off the tongue or off the page there as he says it there. It's certainly the case over the past 50 years that whenever gold has enjoyed a surge in prices, it has then suffered long periods where it has generally trended weaker. But weaker in comparison to what? Like with silver, gold is the same way. That weaker moment we look forward to, and it is always higher than the previous weaker moment in time. But it is also worth noting that the current rally is only the third strongest in terms of percentage gain in the past 50 years, and is actually well behind the price increases recorded in the late 70s and again in the 2000 through 2011 uptrend. Well, it depends on what your points of measurement are. Anybody can scale timelines any way they want. In fact, anybody can make any investment look very bad or look very good. Of course, I don't view gold as an investment. I look at it as a hedge. But nonetheless, you could come on here and make a cogent argument for gold being a horrible investment by even the recent rally to where it is now. Especially if you bought gold on the all-time high, it's a horrible investment. But if you bought gold in 2022, you've more than doubled your investment. But that's his point there. He says the current rally started in October of 2022 when the spot price was around $1,617 an ounce, and initially the uptrend was gentle before accelerating dramatically from November 2024 onwards after the election of Donald Trump to his second term as U.S. president. The precious metal reached an all-time high $4,381.21 an ounce on October the 20th, taking its gain since October of 2022 to 170%. Yes, indeed. So it is doubled. But of course, you think about that, it is almost, in a sense, on its way to almost quadrupling there. But anyways, it has since slipped back to the end and the trade to under $3,980. Of course, now it's $3,985 as I record this video, but who knows what it'll be by the time you see it. The rally over the past 3 years looks impressive, but pales in comparison to the 518% jump between July 1976 and February 1980. And that's 4 years he's giving there, and the 643% gain between February 2001 and September 2011. That's 10 years. That's 10 years. So he's giving different scales. Why pick 10 years and 4 years? And what constitutes, how does he measure a rally? It's very interesting. Both of these extended rallies were followed by a long downtrend, but the losses were nowhere near enough to wipe out the gains. From the peak of around $692 an ounce in February 1980, well, that's wrong too. It got up to $850 an ounce, I think, in January. And gold dropped about 63% to $256 by February 2001, while it retreated 44% from the top of around $1,902 in September 2011. That's wrong too. I remember it very well. It was $1,921. I know it's not that much of a difference, but it's still notable, to a low of $1,052 in November of 2015. What does this mean for the current gold price uptrend? In historic percentage terms, it's not actually that large, despite the massive increase in the U.S. dollar price. This doesn't necessarily mean that the rally will extend for several more years, but it does mean that if it does, it would not be unprecedented. Gold's history also shows that when rallies do end, the price tends to drop back and then trade sideways for an extended period. The final thing worth noting is that analysts have usually found it quite difficult to predict when an inflection point is being reached. And the current situation is a little different to past experiences. Well, I'm glad he admits that, because we know the reason why gold's price has risen up dramatically. Primarily, what's holding up gold right now is central bank buying of the metal. That's right. And that is really what's been happening since 2022. And the markets recognize it by October. And so the rally commenced. Now, there is now a wide range of forecasts for the gold's price, with some analysts calling it to fall back to levels closer to $3,000 an ounce, and others calling for further gains to above $5,000 an ounce for the 2-year view. The key is to work out the current bullish drivers and structural or more likely temporary nature. The compelling argument for a structural rally is that the belief that investors and central banks are seeking alternatives to U.S. assets such as treasuries and Wall Street equities, and gold is one of the few viable alternatives. Certainly, the World Gold Council's September quarter report did offer data supporting this view, with central banks buying a net 220 metric tons for the third quarter, up 28% from the previous quarter. I'm glad that he recognizes that. But that's the only thing that he recognizes there, and is still sort of glossing that over. But he says central bank purchases started to rise rapidly in 2022 and have since been above 1,000 tons per year, with 2025 on target to become the 4th consecutive year. That's exactly right. And I'm glad that he recognizes that as well, too, because that is what has buoyed up gold, and more than likely gold's price is not going to fall too much if we do see it go back. I think the $3,000 level is something to think about. But anyways, investment demand for gold bars and coins, as well as exchange-traded funds, reached 220 tons in the third quarter, up 47% from the same period in 2024, according to the World Gold Council. The bearish note was that surging prices crimped jewelry demand, which dropped 19% for the third quarter to 371.3 tons from 460 tons in the same period a year earlier. There are other risks to the bullish gold picture, such as correction in global equities resulting in investors having to sell gold to cover losses elsewhere. But the ongoing concerns over the U.S. fiscal deficits and the threat to the independence of the Federal Reserve posed by Trump's seemingly determination to control monetary policy are likely to be enough to keep gold firmly on investors' radar. And of course, that's a political statement, and I think, in a sense, these are passing things that I think are unlikely to happen. Like I said, we may see periods where it trades sideways for a little bit, but he's giving a premature death to the gold's rally, essentially. He's saying that this rally is over and just is the third. Well, it could keep going a lot higher. I'm of the camp that is bullish for gold. I think we're going to see $5,000 soon. And I don't know, within the year or what have you. I think it's going to continue going. As long as central banks hold and keep buying, especially if they keep buying, that's going to be a big factor here. And I do think that I think we're going to see probably people adjust to the prices and more smaller gold purchases. But I think we're going to still continue to see some of that in the private sector too, especially in China and India. But we'll see how it plays out. And there could be loss of that demand, I think, could be enough to offset some of the gains, which is why it probably will only go up to $5,000 an ounce. But here's what is missing. Well, number one, I think he is dismissing the rally as being done. It's over. And I don't think it's over yet. Now, that's my opinion, but I think there's more evidence to point in that direction than not. The other thing is very crucial and important. He mentioned gold's record here in terms of its price. And yes, it did have a nominal record, but it also reached a record high when adjusted for inflation. That's extremely important, folks, because gold topped out at $850 an ounce early in 1980. When adjusted for inflation, that would be about $3,548 an ounce. And let's just say $3,550 an ounce and round up, okay? Or we can round down. It doesn't matter because gold has far surpassed that. Even right now, gold is trading higher than that number, well above that number when adjusted for inflation, according to official Consumer Price Index numbers. Now, obviously, when you take into account shadow stats of what the real inflation is, it would be even higher than that, much higher. Or much, the price would be, the $850 or what have you. So we're doing really good with gold, and it has broken records, and I don't think it's over yet, folks. Now, again, I could be wrong. Maybe this guy's right, but I think there is a very much a bias in this report from this analyst. And like I said, people can take numbers and stretch out because he never does define what constitutes a rally. Because I guarantee you that that 3-year and 10-year period in 1980 and 2011, respectively, there were periods and there were dips in the market during those times. I guarantee you. How does he define a rally? He misses that point too. Big mistake if you don't define what the terms are, and you can just arbitrarily pick a sliding scale of ranges. And by the way, this rally, he said it started in 2022. It's the shortest of the three. So, of course, it's going to be in third place because it's a shorter time frame. He's basically writing the obituary of the gold rally. And I think that's somewhat disingenuous. So let me know, or disingenuine, let me know what your thoughts are. I strive to bring you the latest news and analysis in the world of precious metals. If you enjoy what I do here, I hope you will consider subscribing to the channel. I post daily videos. I appreciate all of you who take the time to watch. And so with that being said, I'd like to extend a multitude of gratitude to each and every one of you for watching and encourage you to please rate, share, comment, and subscribe.